Thank you, and over to you, Mr. Periwal.
Thank you, Rochelle. Good evening, friends, and welcome to Clean Science and Technology Limited Q1FY23 post-result earnings call. The call will be initiated with a brief management discussion on the quarter performance, followed by an interactive Q&A session. Management team will be represented by Mr. Siddharth Sikchi, Promoter and Executive Director, and Mr. Prateek Bora, Chief Financial Officer. Just before we begin, a gentle reminder that today's discussion may contain certain forward-looking statements and opinions with respect to the anticipated future performance of the company. Such forward-looking statements involve a number of known and unknown risks, uncertainties, and assumptions, which could cause actual results or events to differ materially from those expressed or implied by the forward-looking statements. With that disclaimer, I'll hand it over to Siddharth for his opening remarks.
Thank you, Ankur. Good evening, everyone. I am happy to connect with all of you again to discuss the performance of the company in Q1 FY23. It's an interesting moment for us as we have completed 1 year of our getting into the capital market. We would like to thank all of you and the investing community for the trust they have placed in us, and we hope and we will keep continuing with the hard work to create more value for our shareholders. I'll quickly brief you about the business environment. The current global macro environment continues to be challenging both on geopolitical front as well as persistent inflation environment which we are seeing around. Prices of key raw materials, energy and fuel costs were quite volatile even in the last quarter. Despite of the persistent headwinds, we are happy that all our geographies and segments did extremely well. We had a healthy growth on back of increased wallet share with our existing customers and gradual ramp up of new products which were launched last year. On financial highlights, one key highlight is that our revenue base has more than doubled over the last 8 quarters from Q1 FY21 to Q1 FY23. Revenues for Q1 23 has reached 234 crores, which is a 60% growth over Q1 FY22. On a year-on-year basis, our exports grew by 40% and domestic revenues have more than doubled. The revenue mix remains at 65% export and 35% domestic. The EBITDA of company increased to rupees 91 crores as against 71 crore, which is an increase of 28% year-on-year. But the margins were impacted as operating leverage benefits largely negated by the inflation pressure across the key raw materials and energy costs, particularly in the form of coal. On standalone basis, profit before tax at 94 crores and PAT of 70 crore grew by 30 and 29% respectively as compared to Q1 FY22. On console basis, PBT at 85 crores and PAT of 63 crore grew by 18 and 15% respectively compared to Q1 FY22. Of course, our balance sheet continues to be debt-free with a cash balance of about 280 odd crores. On sales profile, the sales improvement was led by a combination of good volume growth and improved realizations across all segments. Performance chemicals continue to be the mainstay, with the segment contributing 66% of our overall revenues. The pharma and agro intermediates continued to increase to 23% of revenues, and FMCG contributed to about 10% of our revenues. On Capex front, in this quarter we incurred a Capex of about 23 crores. We have increased our capacities of our flagship products MEHQ and Guaiacol by 50% in the month of April, and the plants are now fully operational. We also aim to increase capacity of a new product called parabenzoquinone by 50% in the coming months. The construction of our two new facilities is on track in our existing Unit 3. These would be used for production of our initial HALS series, and our aim is to commercialize them in H2FY23. Technically, by December, we should be able to commercialize these plants. On ESG front, of course, ESG remains as a priority at Clean Science and Technology. We are continuously implementing several sustainability initiatives across the organization. Our investments in renewable energy with a particular focus on solar power has helped us to reach a milestone contribution of approximately 50% of our electrical energy consumption is from renewable source. We strongly follow the 3R process, reduce, recycle, reuse across all our manufacturing units. Our initiatives on constantly optimizing plant processes has helped us significantly reduce freshwater consumption, and we also target to bring down our GHG, that is greenhouse gas, emissions by another 5%. Under CSR, the company focuses on major areas such as education, vocational skills, environment sustainability, healthcare, and medical relief. We are making a significant progress in these areas and strive to actively contribute to social and economic development of the communities in which we operate. On the outlook, we expect stable revenue growth from our existing business lines and incremental growth from our new capacities. Macro concerns like geopolitical tensions, elevated raw material and power and fuel prices continue to remain short-term challenges. But as a company, we will continue to focus internally to further improve yields and operational efficiencies of our existing and newer businesses we get into. With our extremely strong R&D pipeline, our endeavor is to continue de-risking our product portfolio and geographical presence. Thank you.
Sir, would you now like to take questions?
Absolutely.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star and then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and then 2. Participants are requested to please use handsets while asking a question. We will wait for a moment while the question queue assembles. Our first question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Thank you. Good afternoon, Siddharth. Couple of questions. First, on the pharma intermediate, you have also announced in opening speech that you are looking to increase the PBQ capacity by 50%. So that tells that the response has been good. How has been your initial response for the TBHQ and PBQ?
So, thank you, Sanjesh. So let me put TBHQ, of course, it's a market which goes into as an antioxidant in food industry. Of course, validation with customers are ongoing, and as being a food product, it will take a little time. However, we are still able to run our capacities at about 30-40% odd capacity. PBQ remains an agrochemical, not into food segment. And fortunately, we have seen extremely strong demand because this product was only manufactured in China, whereas the demand was, we are catering to domestic customers based out of India. So with dollars touching about 80 rupees, that would help our Indian domestic customers to look at us, rather than considering China, and we are trying to increase our wallet share with these existing customers based out of India, and hence the thought of doubling the capacity by 50%.
So, how much are we increasing from 2,000 metric ton to 700 metric ton to 1,400 metric ton?
This is for which product, sir?
PBQ.
PBQ, we are increasing from not from 700 tons. We are increasing from 500 tons to 1,000 tons.
Okay. Got it. Now, the second question on the margin side, the phenol prices have been correcting. I know we get the benefit with the lag. Should we assume going forward the worst is behind for the margin, and with falling phenol prices, our margin should only improve sequentially over next 3 to 4 quarters, assuming that phenol prices keep correcting, obviously?
Of course, see, now what happens is, Sanjesh, as you know, last 2 quarters or last 6 months, there was an extremely volatile environment, and we were more concerned of getting material on time. So we have quite a bit of phenol lined up. I think we will end these old contracts because these come with a lag, as you rightly mentioned. If the prices would have gone up further, these would have also helped us. So yes, you are right, the prices are lowering, but we really want to see, because we saw this similar thing happening few months ago where the prices went down a little bit and then again it went zoomed up with the energy prices going up back in Europe. So I think it is, and I am seeing these prices reduced just over the last 2 weeks. I think it is still premature to confirm that these prices will continue to be soft. But if these prices now go softer, then I think we can expect better numbers. Of course, we have to keep in also mind that since we are entering new product segment where we have to pass some benefit to our customers to get or start these validation process, in that case, these will be a little drag, because anytime you get into a new business line, the yield efficiencies are not optimum. So these are a drag, but then over a few quarters when these businesses also become a little mature, then these numbers again become a little bit more better.
Fair, Siddharth. My last question on competition in MEHQ and glycol within the domestic market. How should we see rising competitive intensity now that we are sitting on a very healthy margin when I compare to your peer? Do you see a risk to your valid share, the margin profile with competitive intensity increasing in our core product of MEHQ, glycol and BHA?
So, Sanjesh, I'll tell you, it is a very common perception that when somebody is making margins, other people have to look at that business. It is a very common perception in Indian environment. So we are always prepared for competition. Of course, fortunately, because we are inventor of these processes, we have started these processes. So we are further continuing to improve our yield, our processes. We have proven our record with existing customers over the past several years, both in pharma as well as these monomer industries where we are supplying. So I think, of course, competition is more than welcome, but I think we are on a very strong wicket. We have very large market share, and we have proven customer track record over the past several years. And I think it is, to my understanding, we are quite prepared and will be ready for any new competition coming in.
Fair, Siddharth. Thanks for answering all the questions patiently, and best of luck for the coming quarters.
Thank you, Sanjesh. Thank you so much, boss.
Thank you very much. Our next question is from the line of Abhijit Akela from Kotak Securities. Please go ahead.
Yeah. Good evening. Thank you so much for taking my question. I have a couple. First, on the other income line, if you could please just help us understand the drivers of these forex gains and losses that have been happening, over the past few quarters. So, what exactly drives it? How we should think about, modeling it out going forward?
Yeah. Hi. So, in terms of forex, quarter on quarter for last 4 quarters, we have reported a quarterly income of around 3 to 4 crores. This quarter, we reported a loss of 1.6 crores. Basically, the factor driving here is whatever the outstanding contracts on the date of balance sheet, they get converted on the forward rate, the book rate, less the forward rate on that particular day. So it's a mark to market which hits us. And again, this time it was negative because the rupee depreciation was almost 4% during this quarter. So that's the reason. Otherwise, it's the usual trend is 3 to 4 crore quarterly run rate.
Okay, so is it fair to conclude that gradual and steady depreciation in the rupee is good for us, but sudden changes are what impact us?
Absolutely, because our forex hedging policy is that in the immediate quarter, the hedging is almost close to 80 to 90%, and in the further quarters, the hedging goes down. So Q2 could be close to 60%, Q3 could be close to 50%. and hence a sharp depreciation of the rupee in a very short period of time hurts us negatively.
Got it.
Just to add here, we are not in business of speculation of currency. Hence, when a contract is made with a customer at, say, about 79 rupees, when we know the realizations are decided on a 79 rupees, we tend to hedge that. It could go both ways, but we are, as I mentioned, we are not into speculation of currency. So we would book, and this will be our trend even going forward.
Understood. Thank you. And the second thing was just, given some of these issues facing Germany, where I believe we have some competitors based in that part of the world, but also some customers. Right. So, across your business portfolio, how would you think about the challenges and opportunities that are arising from that situation?
See, the challenge always remains that Europe, if it gets into recession, and people keep talking about that very heavily, and so could, United States as well. See, these all economies are very related because our biggest customer base is also in China, but China serves basically customers in Europe and Americas as well. So if there is a recession happening, it will impact, but also our competitor who is based out of Europe in France, that would also impact if the energy prices, so their manufacturing cost will keep on increasing. So it's a double-edged sword, and I think because we work in these global economies, these are some things which it is very difficult to predict today, but we will have to see how these things really culminate over the next few quarters.
Okay, got it. And just one last thing from me. On the expansions of various products that are happening in terms of capacity, any rough timeline you could help us with in terms of by when you expect these to hit full capacity utilization across, the major expansion projects?
So the major expansion now happening in the HAL series, which I mentioned, which we should expect to start commercial production by December, which is like 4 months from now. So these are two large segments, the segment overall is quite a large segment, and these should start. And then, of course, the next further expansion will happen in a subsidiary, which is a Clean Finochem Private Limited, which will, where the construction will start in about 2 months' time from now, and we expect the commercial production to start end next year.
And how about MEHQ Guaiac, the 50% expansion also?
That already started. I mentioned in my opening speech that the plants have already fully commercialized and operational now.
I was asking about possible full utilization. By when would you expect that?
We are right now running at 50-60% capacity utilization, and it will keep increasing as and when we see the demand in these products.
Okay. Thank you so much. Wish you all the best.
Thank you, boss.
Thank you very much. Our next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Hi. So that just a couple of questions. So, you did mention on the global slowdown being the key risk there. But just from, given we are a large exporter to China as well as, Europe being a decent market for us, how has been the on-ground sort of, cost inflation there, given the sharp rise in natural gas? And I'm also talking more not only from our existing product portfolio, but also from HAL's portfolio, wherein BASF is a larger player there. So does it enhance our competitive positioning versus the global players and hence possibly a faster ramp-up there?
So, of course, I think, if you are competing today with a European producer, it is very, these are one of the, of course, because they are going through a very high energy cost, which was not anticipated. Let us be very honest about it. So these are, they are under a lot of pressure, and they have been increasing prices across their all product segment. And I know BASF has indeed announced price hike in these HAL series of segments. So, of course, we shall be getting benefit of that price increase because BASF still commands the prices of these products. So, all in all, it is a good point for us that these prices will be at elevated levels when we are able to start. And secondly, I think because of these disruptions in supplies from Europe, not because of just sea freight, but also because of these energy prices, the customer base who is based out of India would be more than happy to have a source in India. So I think these should have good advantages to us. And of course, that is the whole point, that we are trying to be as quick as possible so that we are able to, get in these. This is a sweet spot for us. And if we are able to get in at this time, the validation across the customer base should be a little quicker than anticipated.
Sure. And secondly, from a pricing strategy perspective, earlier we had focus on gaining more volumetric share there, and hence relatively lower price hike for us, even in an inflationary scenario when phenol was sort of going up. Now with European gas effective cost of production being higher, and your positioning now, how should one look at the price pass through now? You will continue to work on those prices only what they were earlier to grab more market share, or there could be a mean reversion there as well?
No, I think we will not increase prices for sure, because we are seeing that our customers are also not able to see. Ultimately, I have to see if my customer is able to absorb these costs. It is not only about what am I thinking about my competition, because these are again times when I don't want to really exploit my customers. And as Sangesh asked, how do you defend yourself with new competitors coming in? These are the times where we need to prove to our customers that we are loyal suppliers and not people who are only trying to take. We are not opportunists. We are here to play the long game. So I don't think we are in this thought of increasing prices. We are making decent margins. So we would not be, even always able to raise prices. But we will not raise prices. We'll try and gain customer confidence because of the ongoing competitive environment which we will see in the coming few quarters in India.
Sure, Siddharth. That's helpful. I'll get back into the queue. Thank you.
Thank you, boss.
Thank you very much. Thank you. Ladies and gentlemen, before we take the next question, we'd like to remind participants that you may enter *1 to ask a question. Our next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
For the opportunity. My first question is, you mentioned that we have about 280 crores of cash, and if I recollect correctly, this year and next year put together, we have a Capex plan of about 250 odd crores. Given that we are generating very good profits as well, this quarter was about 60 crores plus. So are there any incremental opportunities which we are looking at, organic or inorganic space, and what is your view in terms of utilizing this significant amount of cash on the books? Thank you.
So, of course, as a prudent policy, we always want to have a 1 year profit with us. It gives us quite a bit of comfort. But barring that, of course, we have increased our R&D strength from 50 people to 70 odd people. We are looking at a lot of intermediates in pharma, agro as a great opportunity moving forward. And as and when these, when I'm talking about health, because that's a big segment, but we are also trying to get into some interesting pharma intermediates which were not made in India so far. Some monomer industry, different products which have not been made in India before. So some of these products will also go online. We'll start commercializing these also in our Unit 4. So all this will, need more Capex. So all this will be there, and of course with new products in pipeline, new things coming up, we might need this cash in our subsidiary going forward.
Right, got it. Second question is in terms of the pricing. You mentioned quite elaboratively, but in terms of contracts, if I recollect clearly, after Q2 results, you had mentioned that you did not increase the price. Last year Q2 results, you did not increase the prices because normally the contracts are on a yearly basis and they will get renewed. So this year also, based on the last year's cost increase, we have renewed the contract from January. And if the phenol or the raw material prices subsequently come down, probably we will be able to get the benefit. Obviously, we are not increasing the prices as you clearly stated, but the other way around.
If these are running contracts, the running contracts, whether the price goes up or goes down, we are locked in. So, of course, wherever there are running contracts, we will get a benefit if these phenol prices further starts going down, which is absolutely a taken. But I also mentioned that if we start getting new inquiries, there is where I've mentioned that I would not want to increase price, because if I can myself see that the raw material price trend is moving downwards, then there has to be a very solid reason to justify to my customer why am I increasing price. And this is not a valid reason saying that, the cost of energy has increased in Europe and my competitor cannot offer, so I'm increasing price. You know what I mean?
Yeah, right. Got it. That's what I meant. Yeah, that's quite fair. Just a clarification on this, how much of our total revenues are contracted on a yearly basis in percentage terms?
25-30%.
Yeah, around 40%. Yeah.
25-30%.
Right. And just one last question. We have seen about 60% YOI growth, top line growth. How much of it was from volumes and how much because of the price increase?
Yeah, so it was mix of both volume and realizations. And you would agree, on YOY basis, last year the raw material prices were also soft. So there has been a realization contribution also.
Right. If you could quantify maybe 50-50% or 40-60?
No, for competitive reasons, we don't want to share volume and realization data.
No worries. Thank you so much for answering all the questions and best of luck.
Thank you, boss.
Thank you very much. Ladies and gentlemen, you may enter *1 to ask a question. Our next question is from the line of Krishan Parwani from JM Financial. Please go ahead.
Good evening, Siddharth and Pratikji. Congrats on a great set of numbers. I have just one question, sir. Since you would be commercializing Hells, my understanding is you could also sell the N-1 or N-2 products of Hells. So do you have any plans to do so or not at the moment?
Oh, of course we will sell. Why not? First we will start seeing how these things, if you look at it, say for instance, Hells is a domestic market right now. If we are able to sell all of our forward integrated product, the end product, then of course we will not sell the intermediate. But tomorrow I realize that the end product, which is 770, is not selling as quicker as I had anticipated, and we are able to make the intermediate of a higher capacity, then we would want to sell that out of India. Anyways, India mein koi producer hai nahi Hells ka, so we'll have to only export it. So we will do that.
Okay.
There is no point in closing a plant when I can make a product out of it and sell, right?
No, but I think that probably one of the, it is Tempo OH, which can be used as an antioxidant as well, right?
Right.
Or rather, probably it's just one of the 7 categories of products. So that's why I was wondering, because that itself can be used as a final product, maybe. So that was my question.
Yeah, 4-hydroxy Tempo is an end product. It is a stabilizer for polymerization inhibitor. It also goes into water treatment chemicals. So definitely we will sell. So we are coming up with 2 products.
Okay.
And of course the N-1, apart from these 2 products, are also sellable.
Fair enough.
Right?
Yeah. Okay. That was my only question, sir. And thank you and best of luck for the future.
Thank you, boss.
Yeah.
Thank you. Our next question is from the line of Jay Shah from Jay Shah PMS. Please go ahead.
Hi, Siddharth. Hi, management. Congratulations for a great set of numbers. I just wanted, Siddharth, an overview on the business side, basically, since you just said that there's a lot of tailwinds and demand coming from the pharma and agro intermediates. I want to know, what is the nature of the business? Is it like a two-sided development when people are coming to you even for, specialty intermediates that are not produced in India? Or these are just, maybe normal demands for the products that, these are available with you. So, what's the nature of the participants? The customers that are coming to you. Are they innovators / the guys who make the APIs? Or
no, we are not selling to any innovators. These are pharma products which we sell to API producers in India. Some of our products which are not made in India before, so we are China plus one strategy types. And of course, we export a major chunk where we are competing with some European brands.
Okay, got it. Okay, that's it from my side. Thank you and all the best.
Thank you, boss.
Thank you. Our next question is from the line of Keshav Kumar from Raksan Investors. Please go ahead.
Hi, good evening, sir. Congrats for a very good quarter. Sir, are we seeing any demand pressure signs in China due to the on and off lockdowns over there?
Not really. I mean, last quarter or 2 quarters were really difficult times for, China. There were zero COVID policies and whatnot they were trying to do. They closed so many ports. But we were able to find alternative ports. We were able to still cater to their needs. Of course, it was not an easy game to sell, but the demand was never slowed down, honestly. And that is why you see these numbers, right?
Yeah, great, sir. So secondly, a bit of a shot in the dark. I wanted to have your view on potential risks that can arise due to AI/ML driven catalytic discoveries in the medium to long term. Because I'm seeing increasingly the publications are coming in this space, and the value proposition is pretty much evident from how we've grown ourselves. So do you see it as a risk, or are you yourself also thinking on the lines of having a multifaceted team with scientists and data scientists together, something like that?
I have not understood your question, but I'm trying to answer. Of course, we are trying to, we have a lot of set of, good scientists, and we are increasing our strength in R&D because we are seeing a lot of demand, a lot of request of products to be made for a lot of our existing and newer customers. So we are trying to address all of those.
So basically what I'm trying to get to is that do you see eventually what the technological prowess we have getting easier to be exploited by somebody due to just technology, the technology being there because of AI/ML? Or is it something which...
Okay. See, I'll tell you, this is quite common in India, as you might know. People try to poach people, and, you can see that happening very, very often in Indian industry. But innovators are, we've invented these processes. We understand the knickknacks of it. We understand the problem zones in this. We have been catering to these set of customers. It's not easy. But, I think for us, it is better to focus on our business, understand where we can go with all these, what we have, try and increase our product basket, and, keep becoming better in our own game. So, otherwise, competition to aate hi rehne wala hai na both.
Yeah, absolutely. Okay, thank you, sir. All the best.
Thank you.
Thank you. Our next question is from the line of Shubham Thorat from Perpetual Investment Advisors. Please go ahead.
Yeah, hello. Good evening, sir. Congratulations on the great set of numbers. So I have 2 questions. Before that, one clarification. So you mentioned that your PBQ facility is going to be doubled from 500 tons to 1,000 tons. Can you tell me by when it is going to be commercialized? I think to miss that point.
I think in the next 1 quarter for PBQ, in about 3 to 4 months' time, we will be able to double the capacity.
Okay, yes. So my first question is, are the raw material prices going to increase by almost half the time? Raw material prices.
Mr. Thorat, I'm sorry to interrupt, but your voice is breaking up. Could you please adjust your phone?
Yeah. So, hello. Hello, sir. So, my question is that our raw material prices 0.5% in the quarter base. So, can provide the raw material prices outlook for the coming quarters?
See, since majority of phenol is one of our very key raw material. It corresponds to about 40-50% of our overall raw material, and which is majorly imported and of course produced within India. And we have covered it for some portion of this quarter. So I think going forward, if we are seeing also a downtrend in phenol pricing, if this continues, then I think we'll see in the quarter 3 and quarter 4 where the prices will come down. Based on crude oil prices.
Fair enough. And second question is that you mentioned that there is a capacity addition in R&D department. So,
Sorry, but your voice voice is breaking again, sir. Can you please adjust your phone or move to a place with better network coverage?
Hello?
Yes, boss.
So my question is that you mentioned you added capacity, added new scientists in your R&D department. So is there any new product in pipeline for coming future?
Of course, if there is product in pipeline, that is why we are adding people in R&D, right?
So I was looking for a specific name. Can you provide specific names also?
So these are again in our current existing segments, performance chemical, pharma, agro intermediates, FMCG. I mean, these are, our universe remains in these chemicals only, right? Specialty chemicals. So we'll move around in the same segment.
Okay, fair enough. Thank you so much, sir, and wish you all the best.
Thank you. Ladies and gentlemen, before we take the next question, we'd like to request participants to please limit your questions to 1 to 2 per participant. Our next question is from the line of Avinash Gupta, an individual investor. Please go ahead.
Yeah, thanks a lot. And I was trying to understand and have a view on what kind of margins we can expect going forward. Because continuously seeing a decline in the margins. Now, on one hand, you are saying that you are the innovators, you have got a lot of advantages in improving the quality, improving the productivity and other things. But on the other hand, you are saying that we are, we don't want to be seen opportunistic and we want to use the current advantage to gain the customer confidence. So I was really wondering, where are we heading to? I mean, what kind of margins we should model in?
So I'm not going to give any absolute number to this question.
Okay.
You have to really understand that while I am running a business, I don't look at 1 quarter or 2 quarters. I look at a business from 3 to 5 year horizon, number one. Number two, you have to understand that when we are adding new products, you cannot expect these margins. So when new products are added, you have to give little leverage to customers so that they try and validate you. So these also impact in margins, because otherwise you can never come up with any new product. So if you sum all of it, you can see what numbers we have presented to you. Thank you.
Okay.
Avinash, just to add that new products have now started contributing almost 15% to our top line. So it's a good product diversification which is happening here.
The new products are contributing 50% of the turnover.
15.
15.
That's correct.
Okay. So that is whenever you're going to do this a new product, we'll have some drag on the margins for some time.
Obviously.
Yeah. Okay. I got it.
Thank you. Our next question is from the line of Sajit Lodha from Birla Sun Life Insurance. Please go ahead.
Hi, sir. Thanks for taking my question. Sir, first question would be regarding, sir, MEHQ market share. Where will we see it now and where were we, say, a year back?
So, sir, earlier, say, we were about 52%. Probably today we are at more than 60%, 65% maybe.
Okay. And secondly, just a small thing, on the R&D side, what is the current cost for the R&D team at that?
Around 3 crores.
Around 3 crores for the 70 people you said?
Oh, no. Right now we have about 40-45 people. We are in the process to add another 20 people. But of course, our levels would be similar to these levels only.
Okay.
There is nobody is like exuberantly expensive or something of that sort.
Okay. Thank you so much.
Thank you, boss. Thank you.
Our next question is from the line of Bala Murali Krishna. Please go ahead.
Yeah, good evening. Regarding this new capacity additions, what kind of revenue we can expect in the upcoming quarters from these new additions?
What, sorry?
Mr. Krishna, could you please use your handset? If you are on speakerphone, we cannot hear you very clearly.
From the new capacity additions which we had done last quarter and which we are going to done this quarter, so what kind of incremental revenue we can expect from these capacity additions?
No, we don't want to put a number guidance, but qualitatively speaking, we have added the capacities of flagship products by around 50%. So we are optimistic of our revenue growth. but we don't want to put a number to this.
Okay. Okay, that's it. Thank you.
Thank you. Our next question is from the line of Saurabh Tendulkar, an individual investor. Please go ahead.
Hello. Congratulations on the great set of numbers, sir. And thank you for taking my question. So I just wanted to ask about this HALS series. So have you got all the EC clearances and everything is in order for launching this new product?
So EC is not for a product, it's for a land parcel, right? So Unit 4
we have it for our existing Unit 3, where these two lines are going to commission by December. And for the new company, which is the Clean Finochem, we expect the ECs to come in the next quarter or so, or maybe 2 quarters.
Okay, sir, because on the environmental clearance website, I can see on the name of this Clean Finochem, TOR is granted. So just wanted to ask about it.
So once the TOR is granted, then I think we have to physically meet the committee, and if they have any concerns or questions, we have to answer them. And then the final EC is granted.
Yeah.
Okay, sir. Copy on that. Thank you.
Thank you, boss.
Thank you. Our next question is from the line of Kaushal Kedia, an individual investor. Please go ahead. Mr. Kedia?
Hello.
Please
Can you hear me?
Yes, we can.
Sir, I got dropped off in the call in the middle. What is the volume growth?
No, Kaushal, for competitive reasons, we don't want to share volume and realization data. But I mean, just to give you a directional view, there has been a volume and realization growth across the products. In fact, quarter-on-quarter basis also. Yeah.
And so with the current run rate that you've done, can we assume you can touch 1,000 crores of top line this year?
No, we are guiding at about 25-30% growth over the last year.
But then the last year, same quarter, because of COVID lockdown, it was subdued, right? So won't you also compensate for that?
No. Last year, we had a robust growth.
There was no subdued or anything. I mean, we came into essentials and we were able to run all our facilities. There was no issues whatsoever.
Okay. Thank you.
Thank you. Our next question is from the line of Manu T, retail investor. Please go ahead.
Hi. Thanks for the opportunity, sir. So my question is actually, at any point, right, with the plans that we have, new products as well as we are commissioning new areas, right? So what will be the maximum percentage contribution from the new products? And also, at what rate those products will grow? This is like 25 to 30% that we are guiding for the existing one. For the new products, what will be the range that you are seeing, sir?
So the range is, as we come up with these new lines, of course, as the market picks up and as we are approved by our customer segments, and this is how the growth will come in the quarters, right? So, if you are setting up, if you are going to invest, how much are you putting in HALS?
Yeah. So the asset turn for the new products could be in the range of 2.5 to 2.7x.
Okay. So what is the current plan, sir? What will be the maximum contribution of the new products at any point, like say FY23? And full year?
So in the range of 15 to 20%.
Okay.
Right.
So current utilization rate, sir, across at the ballpark eye level, what's the utilization rate?
For performance segment, it's 65%. For the other two segments, in the range of 75%.
So average 70%.
So there is more room to add more clients with the current capacity, and in future we are adding more capacities as well. So there's a lot of leg room for us to add more clients, is it? Is that understanding correct, sir?
In both existing and newer product segments.
Yes. Okay. Thank you, sir.
Thank you.
Thank you. Our next question is from the line of Dharmar Shah from Marcellus. Please go ahead.
Yeah. Hi, sir. Thank you for taking my questions. So first one was on the capacity addition for MEHQ and Gorakhpur. Would it be fair to assume that total capacity for the company would be somewhere around 24,000 metric tons or somewhere in that range?
I think we are not talking on product-wise basis capacities and all that.
Okay.
Thank you.
Okay. And the second question was on the competition getting into this product. So particularly, Vinity Organics has announced that they will be getting into MEHQ and Guaiacol via the same route that the Clean Science follows. So
right.
Although the margins for them would be lower, but if we think about it, the customers would be willing to have two customers to diversify their supply base. So would it in any way impact our demand for Clean Science?
Sure, I think it is a little premature statement now. I mean, somebody has announced to commercialize, to come in the market, to validate the products, to get into the customers. I mean, it's a game in itself, and by the time we would have, further become better in our existing business line, we would have added newer capacities. So I think it's still premature just on an announcement to get into too much details. I think we will closely watch and see how things roll up.
Okay. And just earlier in one of the conference calls, you had mentioned that you are working on the product called phenothiazine. Any update on that, sir?
Actually, we're working. We are still stuck with the right form of the product. So we've still not been able to successfully devise the right form. We are still working on it. We have not totally lost hope, but it's difficult. You can imagine if there are only 2 companies globally making that right form. 3 companies globally, and no one in China, and of course nobody in India. So there is some trick to the game. We are trying our best, but let's see where it goes.
Okay. Thank you very much.
Thank you. Our last question is from the line of Anthony Joy, an individual investor. Please go ahead.
Good evening, sir. I just want to know is, with your suppliers, how long is your contract, the minimum as well as the maximum period?
It depends from quarterly to half monthly, somewhere even annual. So the supplier contracts also differ from product to product, country to country, supplier to supplier. There is a lot of variety to it. So it's very, I would have to give a very generalized answer to that.
Okay. Fine. Thank you.
Thank you very much. Ladies and gentlemen, I now hand the conference over to the management for closing comments. Please go ahead.
So thank you so much for all of you to be attentive and attend our earnings call. And I hope I have been able to satisfy all your questions. If there is any further questions, you can email us and we'll try and answer as suitably as we can. Thank you again, and looking forward to your support in the coming quarters as well. Thank you so much.
Thank you very much, members of the management team and Mr. Periwal. Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.